And yes, the president ratcheting up the pressure on China and on the Fed. So what does this mean for the markets? We had a tough one today. I want to go to our market watchers, Larry Shover and Danielle Shea. Danielle, obviously a tough day for the market. Here's an interesting thing, though. It moved on tweets that don't necessarily change the fundamentals that had it up earlier in the session. So how does an individual grapple with these two dynamic forces?
I completely agree with you, Charles, in the fact that, yes, the market's moving on tweets, and you're absolutely right. I mean, the fundamentals have not changed here, but the problem is that the market does not like uncertainty, and this continued turmoil with China makes investors feel like they shouldn't have their money in the stock market, so they're pulling it out, and it's falling.
You know, Larry, I agree with Danielle, except one thing. China announced their retaliation early this morning. And by the way, most people thought they would retaliate. And there's tougher things they could have done. The Fed made its decision. Jay Powell gave his speech, rather. It was lackluster. It wasn't what Wall Street wanted. But we were still edging a little bit higher. And it was all derailed because of the tweets. And listen, I think most of the people watching this show want us to fight China. I don't know, though, that we need to have to do the kind of tweets that send the market down 600 points.
No, I think you're exactly right. The tone has been set by Powell. It did disappoint Wall Street. The initial reaction was dovish, but it quickly turned hawkish. And then when you have the China trade tension persisting, it really matters. It matters a lot because I think investors realize uncertainty is no good. It's going to end up raising input costs for the U.S. Corporations. It lowers output. And keep in mind, 40 cents of every dollar right now is being bought by foreigners to broaden, to buy back. At the end of the day, it's going to wind up being backwards where, foreigners will end up hoarding U.S. dollars, and the U.S. household will end up winding, financing the U.S. deficit. So it's really no good. It's a loser on all fronts. And I think something that started off as intellectual property defense has wound up escalating to something that nobody bargained for.
Jim, you and I have talked so many times, and, I think the idea is that China could have announced this morning that they were going to block all rare earth materials, very vital to the technology industry, or put American companies on some sort of bad actor list. They opted not to do this. In fact, they said some of these tariffs are going into effect on September 1st, some on December 15th, echoing what President Trump is doing. So we knew the tit for tat was in there. They could have taken a harder stance. By the same token, you've got two narratives here, Jim, and the American public wants us to defeat China in its unfair trade practice, whereas Wall Street wants something different. Certainly these corporations, they want to keep those big bottom line profits. How do we merge those two?
Well, there is a middle ground, and it involves having a consistent and articulated strategy with specific goals that everybody can understand, and then going after them and measuring your progress against those goals rather than a little kid in the sandbox throwing out hate messages that only confuses things, alienates people, confuses businesses. And I think that the investment community and the business community was not happy with the way Trump conducted himself this week. There doesn't seem to be a clear style, just a lot of name calling. And I think what the market is telling you is that if it continues, it's going to change the facts on the ground because businesses are going to pull back, which means hiring will pull back, which means consumers will pull back. So I would implore the administration to be a little bit more disciplined, a little bit more focused, a little bit more clear-sighted as to what they're trying to accomplish.
Danielle, but isn't that sort of what's happening in this country, the idea that the American consumer, that the 7 million jobs that vanished, the manufacturing jobs, that we should always be held at the whim of businesses, that they should be the overlords of us fighting or not fighting back a foe like China, which is pumping in dangerous fentanyl, millions of Americans hooked, overdose going through the roof. I mean, we should be fighting back against that, shouldn't we?
Yes, and I mean, I agree with what President Trump is trying to do, and it makes a lot of sense when he's saying, okay, guess what? Now we're just going to pull our American companies out of China. And I can understand that, but at the same time, when you look at the reality of it, it's going to take quite a lot of time and money for those American companies that are in China to create a new supply chain, to complete new manufacturing businesses in the U.S., and that's going to continue to have the stock market in a volatile state.
I agree with you, although I will say so far experts have been shocked at how quickly the supply chain has shifted. We see where Mexico is now #1 in terms of exports, and China is starting to drift down the list. Vietnam and these other countries doing very well. But here's the thing, Larry. On one end, what's really helped this market this week, and one thing we learned in the last 2 weeks, the American consumer is an amazing juggernaut. We saw those retail sales last week, phenomenal. Walmart sales, phenomenal. Home Depot sales, phenomenal. Lowe's sales, phenomenal. Target was up 21% yesterday alone.
Yeah.
So we've got a strong and robust American consumer. Can that change? Do you think that can ride us through the storm?
You know, it can change, and it can change quickly. That's one thing that's really hard to gauge. But keep in mind, the latest University of Michigan consumer survey was the largest monthly drop since 2012. With all these realities in front of us, I mean, something else is afoot. And I think right now, the data coming up even this week, we have capital goods, we have consumer confidence, PCE numbers. I think they're going to play a lot more important of a role than they have in the past few weeks, because the consumer has carried the economy. It could continue to do so, but it's also very fickle and could change in a heartbeat.
Real quick then, Jim, I do want to ask, what would you like to see from the administration now? Do we need to hear that the meeting in September is still on? And would you like to see President Trump maybe walk back a little bit of some of the things he tweeted today?
I'd like him to absolutely walk back the rhetoric and to become more specific and disciplined and lay out exactly what he wants to accomplish over what time period, what the markets are, how he's going to measure the Chinese and create a cooperative, disciplined, tough but cooperative attitude rather than name calling that's only going to alienate the other side and scare investors and consumers.
All right. Thank you all very much for helping us through that. Meanwhile, President Trump ordering American companies